Imagine this scenario. You stroll into a shopping mall, pull out your brand new credit card, and finally buy that item you've been dreaming about for months. It feels fantastic. No hassle, no cash changing hands. Just a quick beep, a grin, and a plan to pay later. But what if I revealed that this simple action is actually feeding into one of the cleverest ways to take money from people ever created? The reality is, credit cards aren't really about making life easier. They're about gaining power over you. They're not your helpful financial buddy. Instead, they're a massive trap worth trillions of dollars, built to keep you stuck in endless debt. To really get this trap, let's travel back to the 1950s, when credit cards first appeared. At that time, the concept seemed groundbreaking. Buy today, pay tomorrow. Companies like Diners Club, American Express, and later Visa and MasterCard talked about freedom and choices. But what they were truly offering was a way to make you rely on them. Once you get used to putting off payments, it's hard to stop. It's similar to a habit that's tough to break, like smoking. Legal, addictive, and super profitable for the sellers. Nowadays, people in the US owe over $1 trillion on their credit cards. Think about that. It's bigger than the entire economy of many countries. And here's the sneaky part. Credit card companies actually want you to stay in debt. They build their whole setup around it. Their business depends on one key thing: the extra money they charge for borrowing. In 2024, the typical credit card interest rate in the US reached about 25%. For some people with lower credit scores, it's even steeper. That means you're paying a quarter of what you bought each year just for the privilege of not paying on time. You might think these companies earn money mainly from fees they charge stores for accepting cards. But that's only a small piece. The big money comes from interest. Plus, there are late fees, fees for going over your limit, fees for transferring balances, and yearly fees. It never stops. These firms don't just lend cash. They shape how you act. Every text message reminder, every notice about your minimum payment, every rewards point system. It's all about mind games. They've turned owing money into a game that makes you feel like you're winning, even as you're losing. Then there's the trick of minimum payments. This might be the most profitable scam in today's money world. Your bill might show a minimum payment of $50. That seems doable, right? But if you only pay that much, you could end up paying 5 times the original cost over 10 years. A $1,000 computer could easily turn into $5,000 once the interest piles up. The system doesn't want you to clear your debt. It prefers you to pay slowly, like subscribing to your own financial downfall. Now, you might say, I'm smart about this. I pay my card off fully every month. That's awesome, but there's a catch. Even if you avoid interest, the system still makes money from you. How? Through your data. Every time you swipe, buy something, travel, or eat out, your card company collects details about you. Who you are, what you like, where you go, and how much money you have. This information is priceless, and they sell it, study it, and use it to guess and influence how you spend. Credit cards also create a fake sense of security. When you can grab thousands of dollars instantly, it feels like real wealth. But it's not. It's just debt pretending to be opportunity. This illusion of success leads people to spend more, borrow more, and save less. On the surface, the economy looks strong with all that spending and growth. But underneath, it's a dangerous time bomb. Every borrowed dollar has to be repaid with extra charges. In tough economic times, credit cards become a risky tool. People use them more to cover basics like food, rent, or doctor bills when money is tight. But the more they use, the deeper they sink. The typical American family now has about $7,000 in credit card debt, and many owe much more. The funny thing is, the same banks that give you easy credit will punish you if you slip up. Miss a payment by just one day, and your interest rate can jump. Fall too far behind, and they'll send collectors after you, sometimes selling your debt cheaply to tough agencies. And it gets even worse. Credit card debt doesn't just hurt one person. It affects whole economies. When millions are trapped in ongoing debt, their future earnings are already claimed. That means less saving, less investing, and less real growth. Meanwhile, the big financial groups behind these debts use your interest to buy back their own shares, give bonuses to bosses, and lobby for loose rules, keeping profits high. Credit cards have turned into a hidden tax on everyday people and the middle class. Wealthy folks use them wisely, while others use them just to get by. And that's exactly how the system was meant to work. The idea of financial freedom hides the truth of being controlled. Just when people start to see this, banks introduce new shiny options, like cashback rewards, zero interest transfers, or travel points. It's the same problem in a nicer package. So, as we wrap up this first part, keep this in mind. Credit cards aren't bad on their own. They're just tools. But in the wrong hands, or without full knowledge, they become snares. And these snares are tightening around millions every day, one small payment at a time. To truly grasp how big this system is, we need to see how credit cards changed from a simple help into a worldwide control machine. In the 1980s, rules for banks were loosened across the financial world. The U.S. Supreme Court made a key ruling. Credit card companies could set interest rates based on where their main office was, not where customers lived. Almost right away, banks moved to places like South Dakota and Delaware, where there were no limits on rates. That's when things really opened up. What started as 12% interest jumped to 20%, 25%, even 30%, and no one could stop it. This was the moment credit cards became weapons. Banks saw that debt wasn't a risk. It was something to profit from. Every loan, every balance, every unpaid bill could be bundled, turned into securities and sold. Your debt became an investment for others. Just like home loans in the 2008 crisis, credit card debt was packaged and traded. Investors bought them, chasing the high returns from interest. So, while you struggled with payments, someone on Wall Street was making money from your hardship. And this isn't just a guess. It's how the system works. Data from the Federal Reserve shows that when people miss payments on credit cards, it actually helps parts of the financial world. Why? Because higher risk means higher rates and fees. Banks stay safe, investors get rewards, and you end up with the bill. It's a perfect setup. Win for them, lose for you. Then came the big push in marketing. The 1990s flooded mailboxes with credit card offers. College students, stay-at-home parents, retirees. Everyone was targeted. Banks learned that the best way to get a customer for life was to hook them on debt early. Campuses had booths giving out free shirts and pizza. All you did was sign up for a card. Students didn't know this was the start of a long-term money relationship most couldn't escape. By graduation, many had thousands in high-interest debt before their first job paycheck. But the tricks didn't end there. Once cards were everywhere, banks needed new ways to get more from current users. Enter rewards programs. Cashback, miles, points. Sounds great, right? Spend and get something free. But these are the ultimate mind tricks. They encourage you to spend more than you would. Studies show people with rewards cards spend 12 to 18% extra on average. And that extra spending means more interest, more fees, and more profits for banks. Even for those who pay off monthly, banks win. Stores pay higher fees to cover rewards, so prices go up for everyone, even cash buyers. It's a hidden way to move money from the poor to the rich. You think you're getting free trips, but you're really funding the fake idea of free money. Now, let's look at the digital shift, because credit cards didn't just change spending, they changed what money means. Every purchase leaves a digital trail. That's valuable info, not just for banks, but for tech firms, advertisers, and even governments. They track where you go, what you buy, and when you're likely to spend. It's watching behavior on a huge scale. With this data, they can guide, predict, and shape your choices. That's not just business. It's control through algorithms. Think about buy now, pay later apps. They're the fresh face of an old idea. They claim to be nicer than credit cards, but they work the same way. Spend now, deal later. They aim at younger people who don't trust banks but want quick fixes. It's the same habit in a new look, colored with ease. And since these often don't show on credit reports, users feel safe until missed payments bring fees. But the scariest part is how this changes society. It pushes buying over saving. It trains people to think in monthly costs instead of totals. It's turned personal money management into a never-ending race, where you're always moving but going nowhere. And this race keeps the whole economy running. If people stopped spending on credit, the fake growth would crash instantly. Governments like this too. A population in debt keeps economic numbers high. Spending by consumers makes up almost 70% of the US economy. So, your debt powers the system that traps you. When the next crisis comes, governments and central banks help, not to save you, but to protect lenders. Bailouts, extra money, lower rates, all to keep things going. In the 2008 crisis, millions lost homes, jobs, and savings. But credit card companies came back stronger. Why? They were too important to fail. They raised rates, cut credit for the poor, and boosted fees while making huge profits. By 2010, they earned $20 billion a year just from late fees. That's not money management. It's legal taking advantage. And here's the cruelest part. The same groups trapping people in debt also offer money advice. They back programs teaching budgeting while profiting from the habits they created. It's like a drug seller telling you to stay clean as long as you keep buying. This isn't about bad choices. It's a built-in system that profits from human needs for comfort, status, and safety. It knows how to press those buttons. That's why even as pay stays flat and costs rise, card balances grow. For many, it's not a choice. It's survival. By now, you might ask, is there a way out? Can we break free from a system that earns from our debt? The answer isn't easy. Credit cards, like any strong tool, are woven into daily life. Leaving them means giving up a comfort the world relies on. But knowing the system, seeing the trap clearly, is the first step to freedom. So, how deep does this trap go? Let's step back for the full view. Credit cards aren't just a money product. They mirror the modern economy. They exist because we live in a world of constant debt. The system needs you to borrow or everything collapses. That's not an overstatement. It's the base of how paper money economies work. Every dollar is made as debt. When you use your card, you're helping make more. In this way, the credit card world is a small version of global money. Governments borrow from central banks, banks from each other, companies borrow to buy shares, and people borrow to live. Everyone owes someone up the chain. The more debt grows, the richer the system gets, until it doesn't. Sooner or later, borrowing more hits a limit, and collapse is sure. But it doesn't happen fast. It sneaks in through rising prices, higher rates, and slow loss of buying power. Have you seen how credit card rates stay high, even when banks cut rates to almost zero? That's no accident. Consumer credit is one of the few spots for steady big profits. No matter the economy, credit cards keep earning. As living costs climb, people borrow more to fill the gap. It's a bad loop. Prices up, pay flat, borrow, banks profit, more money made, prices up again. Your card swipe is another beat in that cycle. Let's talk about the human side, because behind the numbers are real lives. People who thought they were okay until something unexpected hit. A hospital bill, car fix, or job loss. Suddenly, a $2,000 balance becomes $8,000 with interest and fees. When they can't pay, collectors call. Their credit score drops, insurance costs more, and jobs can slip away. It's not just money. It's mental stress. Yet we act like it's normal. We blame people for not planning or spending too much. But the truth is, the game is unfair from the start. The average family has nearly $10,000 in card debt, and interest eats more than food costs. You're told to be responsible, but the setup is made for you to fail. Your failure is their win. Even the fixes from the industry keep you trapped. Debt combining loans, balance moves, counseling. All stay within the system. You're not escaping. You're just in a different box. As long as debt exists, you're part of the machine. But here's what the system doesn't expect: knowledge. When people realize the whole money world relies on their debt, it loses strength. The real power isn't cash, it's belief. The second people stop trusting endless credit, the system cracks. This isn't about destroying cards or living off-grid. It's about seeing that what's sold as money freedom is often control. Every ad, reward, or fancy design makes you feel strong. But real strength comes from knowing who gains when you swipe. Now, let's zoom out more. The US economy runs on over $1 trillion in card debt, growing faster than payer growth. It's a bubble no one mentions because it's spread wide. Not like the 2008 housing burst. It bleeds slowly, attacking the middle class's ease. More debt means more power for companies and banks over politics. Money buys influence. You might wonder, what if this bubble bursts? If people stop paying or borrowing? We've seen hints. During the 2020 pandemic shutdown, spending dropped and card profits fell. Governments gave stimulus checks, not just for help, but to keep credit alive. If spending stopped, the fake success would vanish. That's the scary truth. Credit is so key to the economy it can't fail without crashing everything. It's the ultimate dependence. What was meant to free people became a lifeline for leaders and businesses. But there is a way forward. Not through big changes, but through awareness and smart choices. Start by viewing your card as a control tool in freedom's clothes. Use it wisely, not on feelings. Pay it off not for the bank, but to leave the race. And ask, if $1 trillion business needs your debt, what if millions stop playing? That's their fear. A money-smart crowd that gets how cash, credit, and control work. Once you spot the trap, you can step out. And when enough do, the system, with all its twists and power, starts to break under its own lies. So, next time you swipe, remember, it's more than a simple buy. It's a choice in a bigger game. To break free, consider these steps. First, track every spend and pay off monthly to avoid interest. Second, build savings as a buffer against surprises. Third, learn about your credit score and use it to your advantage, not theirs. Fourth, explore cash or debit for everyday buys to cut data sharing. Fifth, educate yourself on money basics through free resources, not bank-sponsored ones. By taking these actions, you're not just managing money, you're reclaiming control. And as more people do this, the trap weakens. Remember, financial freedom isn't about avoiding tools, it's about using them wisely. So, stay aware, spend thoughtfully, and let's build a future where debt doesn't define us. Thank you for watching this deep dive into credit cards. If you found this helpful, like, share, and subscribe for more on Money Matters. What's your take? Do you see credit cards as a help or a trap? Let me know in the comments. Until next time, keep learning and stay financially smart.